Breaking news this afternoon, stocks are plunging across the board as panic selling grips the market. Investors are scrambling for answers.
Every so often, America wakes up to the same question. Why is the stock market down today? It's typed into millions of search bars. It flashes across trending pages. It echoes on trading floors, in boardrooms, and in living rooms. Because when the stock market falls, it isn't just numbers on a screen. It's paychecks. It's savings. It's retirements. It's the dream of sending kids to college, or the fear of losing a home. And today, the market is falling. But markets don't fall in silence. They leave clues. And if we follow them, we find a story. A story of fear, of power, of traps.
The market is crashing!
Money traps. Why is the stock market down today?
Stocks fell sharply today as concerns about rising interest rates continue to weigh on investor sentiment.
This morning, the Nasdaq opened lower. Tech stocks, the giants of Silicon Valley, bled red. The Dow Jones stock markets, a symbol of American industry, wavered. The S&P 500, the broad middle ground, began to sag. Headlines raced across the internet. Stocks today are sliding. Nasdaq today is plunging. Why is the stock market down today? To some, it felt sudden. A routine morning derailed by chaos. But markets never move without reason. Behind every tick down, there are forces pulling strings. Some are obvious, others are hidden in plain sight. So if today is a crime scene, who are the suspects? Who is guilty of driving markets down? Our first suspect doesn't sit in New York, he sits in Washington. The Federal Reserve, the most powerful financial institution in the world. Its name sounds distant, bureaucratic. But every American, whether they know it or not, lives under its shadow. The Fed has one weapon above all: interest rates. Raise them and borrowing becomes expensive. Mortgages swell. Car loans choke. Credit card debt snowballs. Lower them and money floods the system. Stocks soar, bubbles inflate, and crashes loom. Today, traders waited for a thin packet of words, the Fed Minutes, a document outlining what policymakers discussed behind closed doors. But here's the trap. Those words, no matter how dull they sound, have the power to erase billions of dollars in a single trading day. Because markets don't trade on today's reality. They trade on tomorrow's fear. In December 2018, Jerome Powell said rates were a long way from neutral. Just 7 words. The market crashed 10% in days. $1 trillion gone. That's the Fed's shadow. Whispered words that can make or break Wall Street. And today, the same fear returns. Will the Fed cut? Will the Fed hold? Will the Fed break the market again? But maybe the Fed isn't the only hand on the lever, because while Washington whispers, Silicon Valley trembles. The Nasdaq isn't just an index. It's America's tech dream. Apple, the iPhone in every hand. Microsoft, the software behind every office. Amazon, the store that ate the world. Nvidia, the chipmaker powering the AI revolution. For months, these names carried the market higher. The Nasdaq today wasn't just rising, it was defying gravity. But gravity always wins. And hype has a price. The year 2000 proved it. Now AI, artificial intelligence, wears the same crown. To some, it's the next electricity. To others, the next dot-com trap. And as the Nasdaq falls, America asks, are we building a revolution or reliving a delusion? But markets don't fall only because of companies. They fall because of us. And the noise we make may be louder than the truth.
As you can see, the markets are reacting to the news. And
today, every American with a phone is a financial broadcaster. Stock market news spreads at the speed of a swipe. On TikTok, panic goes viral. On Reddit, theories multiply. On CNBC, experts debate endlessly. On Twitter, everything burns at once. And in the noise, Google searches explode. Stocks today. Nasdaq today. Why are stocks down today? But here's the trap. Information overload doesn't bring clarity. It brings fear. The more we search, the more afraid we feel. The more afraid we feel, the more we trade, and the cycle feeds itself. Markets aren't just numbers. They're emotions coded into prices. Fear sells, greed buys. And every headline, every search, every post
while there's
fuels the
short-term
machine.
volatility, the fundamentals suggest a correction, not a full-blown crash. We're seeing some profit taking.
But the real cost of panic isn't on Wall Street's trading floors. It's in the homes of ordinary Americans.
This is not good. We should have sold everything last week.
Don't say that, dear. It might bounce back.
It's a bloodbath out there.
When markets fall, the pain spreads far beyond the stock exchange. A family sees their retirement account shrink. A college student watches their Robinhood balance collapse. A retiree relives 2008 when the financial system nearly broke. These are the money traps. They're not in hedge funds or skyscrapers. They're in kitchens, on smartphones, in the quiet moments when Americans ask themselves, what now?
The market is just tanking today. I know our retirement accounts took a huge hit.
This is unbelievable.
सिर्फ कितने देखेंगे इजे के बस में के बेल क्या पनी कितने जोके देखेंगे
In 1987, they called it Black Monday. In 2008, it was the Great Recession. In 2021, it was meme stocks and GameStop. Every generation asks the same question: why are stocks down today? Every generation learns the same painful lesson: because markets rise and markets fall. And fear always wins the first round. Today's fall may be nothing, or it may be the spark that ignites America's next financial storm. Because the stock market isn't just about today, it's about tomorrow. And tomorrow always brings another trap. If you want to see where this story goes, if you want to understand the traps before they spring, don't miss what's next. Subscribe to Money Traps and turn on notifications so you never miss the next chapter. The Nasdaq, the Dow Jones, the Fed. Every twist, every trap revealed.